Welcome back for another deep dive. Today, we're going to be talking about finance and economics.
Okay.
Specifically, we're going to be looking at how the overall health of the economy is
Mm,
connected to the decisions that investors make.
interesting.
Our main source today is going to be an academic paper
Okay.
called, and it's a bit of a mouthful,
Right.
Production-Based Asset Pricing and Economic Tracking Portfolios, establishing a dynamic partial equilibrium link between economic state and investment levels.
Oh, wow. That's a long one.
Yeah, it's a
Yeah.
long one.
Yeah.
But basically what this paper is trying to do is figure out if we can predict
Okay.
how much businesses will invest
Hmm.
based on the current state of the economy.
Interesting. So, like, just looking at how the economy is doing right now.
Yeah, so it's like, can we take a snapshot of, interest rates,
Hmm.
what's being produced in factories,
Hmm.
how optimistic or pessimistic people are feeling about the economy,
Right.
and then use that to say, okay, this is probably how much businesses are going to invest.
Yeah. So it's kind of like trying to predict the future of businesses based on, like you said, a snapshot of what things look like right now.
Exactly.
Cool.
So hopefully as we dig deeper, we'll uncover some surprising links between factors that, at first glance don't seem related at all.
Yeah, that sounds really fascinating.
All right, so where do we begin?
Well, the paper starts by laying out some key ideas.
Okay.
One of the big ones is this concept called production-based asset pricing.
Okay.
And it's this idea that companies make investment decisions based on how productive they are right now
Mm-hmm.
and what they think their sales will look like in the future.
Okay, so if I'm picturing, like, I'm running a food truck,
Okay, yeah.
I'm way more likely to stock up on ingredients if I think I'm going to have a line of customers the next day.
Exactly.
If I think it's going to be slow, I'm going to, order less food.
Yeah, you don't want to be, stuck with a bunch of extra stuff.
Exactly.
Yeah. So it's all about making smart bets based on your current situation
Mm-hmm.
and what you think is going to happen in the future.
Makes sense.
Yeah. And then the paper also talks about this idea of economic tracking portfolios,
Okay.
which are groups of stocks that tend to rise and fall with certain economic factors.
So if, like, oil prices go up,
Yeah,
stocks of energy companies would probably go up too.
exactly. Yeah. So if you're invested in energy stocks and oil prices are going up, that's probably good news for you.
Okay, that makes sense.
Yeah. And so the paper is arguing that if we analyze a bunch of these different economic indicators,
Okay.
we can actually build a model that predicts investment levels.
So it's like we're creating a roadmap that tells us where investment is going to flow.
Yeah. It's like a guide for investors to see where the opportunities might be.
That's really powerful stuff.
It is. And this paper is very data-driven.
Okay.
They looked at a ton of information.
Like what kind of stuff?
So they looked at industrial production figures
Okay.
for the entire U.S. economy,
Wow.
and then also for specific sectors.
Okay.
They also looked at macroeconomic variables,
So things like,
interest rates,
Mm.
inflation,
Sure.
the value of the dollar,
got it.
and then historical data on stock market performance
Mhm.
and venture capital investments.
Wow. So they really went all in on the data.
Yeah, it's a massive amount of data covering a significant time period.
So, like, what kind of time frame are we talking about?
So from 1972 all the way to 2007.
Wow, that's a lot of data.
It is. They really wanted to get a complete picture of how the economy influences these investment decisions.
Okay, so what did they find?
Well, one interesting thing they found
Yeah.
is that even investments that are considered safe,
Like what?
like consumer staples.
So, like, food.
Yeah, like
Food, household goods.
Exactly, the things that people buy no matter what.
Yeah.
Even those are influenced by the broader economic climate.
Really? I would have thought those would be kind of, like, insulated.
Yeah, you'd think so, right?
Yeah.
Because people always need those basic products.
Yeah.
But the paper found that even these investments are affected by things like interest rates,
Mm-hmm.
industrial production, and even the price of gold.
Really? The price of gold.
Yeah.
How does that play into things like grocery stores and, like, cleaning supplies?
Well, it's all about investor psychology
Okay.
and how they perceive risk.
Okay.
So the price of gold is often seen as a safe haven asset.
Mm-hmm.
So it's something that people flock to when they're worried about the economy.
Okay.
So when the price of gold goes up, it can signal that investors are getting nervous.
Ah,
And that can have ripple effects across the entire market,
interesting.
even impacting those safe consumer staples sectors.
Wow. So it's almost like gold is like this barometer for the overall mood of the market.
Exactly.
That's pretty cool.
Yeah, and that mood can affect investment decisions across a wide range of industries.
So it really shows you how interconnected everything is.
Yeah, it all ties together in some way.
Yeah. Okay, so how did they actually use all this data?
Okay, so they started by focusing on the S&P 500.
Okay.
Which is, a broad indicator of the U.S. stock market.
Yeah.
And they tested tons of different combinations of these economic variables,
Mm-hmm.
trying to find a group that could reliably predict how the S&P 500 would perform
Okay.
one period into the future.
I bet they had to use some pretty powerful computers to do that.
Oh, absolutely.
Yeah.
But what's really fascinating is that some of the variables that were really strong predictors were kind of surprising.
Oh, like what?
So one of them was the 12-month average of what's called the BBB-AAA spread.
Okay.
And this is the difference in yields between two types of corporate bonds.
Okay.
And it's basically a measure of risk appetite in the market.
So a wider spread means investors are more cautious,
Exactly.
and that can predict how the stock market as a whole might do.
Yeah.
Interesting.
Another surprising predictor was the 30-day average of the Dow Jones Industrial Average Gold Index.
And that's
This block tracks the price of gold.
Okay.
And remember how we said gold is like a barometer for market sentiment?
Right?
Well, this index actually had a significant influence on the S&P 500's performance.
Wow. So even things that you wouldn't think are connected, like the price of gold,
Mm-hmm.
can give us clues about what might happen in the stock market.
Yeah. It's all connected.
That's incredible.
Yeah. And they didn't just stop at looking at the market as a whole.
Oh, okay.
They then took this same approach and applied it to specific sectors within the S&P 500.
Okay, so like what kind of sectors are we talking?
So things like consumer discretionary.
Like cars and appliances.
Exactly.
Okay.
Consumer staples, which we just talked about.
Mm-hmm.
Energy, financials, healthcare,
Mm-hmm.
industrials, materials,
Okay.
technology, and utilities.
Wow. So they basically tried to create like a custom economic forecast.
Yeah, kind of like a tailored
So that's
forecast.
for each of these sectors.
Yeah.
Okay.
And what they found was that different economic factors drive investments in different parts of the economy.
So it's not a one-size-fits-all.
Exactly.
approach.
Yeah, different things matter for different sectors.
Okay.
So, for example, when they looked at the consumer discretionary sector, things like cars and appliances,
Okay.
they found that factors like industrial production
Okay.
in a bunch of different areas,
Mm-hmm.
as well as that BBB-AOA spread we talked about earlier,
Right.
those were particularly influential in predicting investment levels.
So if you're thinking about investing in a specific sector,
Yeah,
you really need to be paying attention to the specific economic indicators
exactly. You got to
Yeah,
do your
that
research.
are driving that sector.
Yeah, absolutely.
It's fascinating.
It is.
I'm starting to see how you could actually apply this knowledge in the real world.
Yeah, there are definitely some practical takeaways here.
But we've only just scratched the surface.
I mean, the paper also goes into the world of venture capital,
Okay.
which is a whole other landscape.
Yeah,
But maybe we can save that for the next part of our deep dive.
that sounds good to me.
All right, guy.
So we'll pick this up in part 2.
Sounds good.
So we talked about how the economy can influence investments in the stock market.
Mm-hmm.
But what about venture capital?
Yeah. Venture capital is a different world.
I would think that, venture capital being so focused on innovation and like brand new companies
Yeah.
wouldn't really be as influenced by those like broader economic trends.
That's what you'd think.
Yeah.
But the research suggests otherwise.
Oh, really?
Yeah, even in the world of startups, the economy matters a lot.
Huh. So even if you're like betting on a company that's creating something totally new, you still have to pay attention to those bigger economic forces.
You do. Those forces are always at play.
Okay, so what did they find specifically about venture capital?
Well, they found that overall venture capital investment is heavily influenced by things like industrial production
Okay.
in a lot of different sectors like manufacturing, construction, energy, transportation.
Wow. A pretty wide range.
Yeah, and even things like the core consumer price index.
Which measures inflation.
Exactly. That played a big role too.
Huh. So if I'm a venture capitalist looking to invest in a startup, it's not enough to just, evaluate the company's idea and the team. I also need to be thinking about like the overall economy.
You need to be asking yourself questions like, is the economy growing?
Okay.
Are consumers spending money?
Mm-hmm.
Are interest rates rising or falling?
Okay.
All of those factors can have a huge impact on a startup's chances of success.
Even if the company has like a really revolutionary product.
Even then, they can't escape the pull of the economy.
Yeah, it's like even the most innovative company can get kind of sucked in by like a downturn or something.
Yeah, exactly. They're not immune to it.
Okay, so within venture capital, did they look at different sectors?
They did. And what's interesting is that different sectors were affected by different economic factors.
Okay, give me an example.
So, for instance, investment in the biotechnology sector
Okay.
was really sensitive to changes in the consumer credit rate.
Huh, that's interesting.
Yeah.
Why would that be? What's the connection between, like, biotech and how easy it is to get a loan?
Well, think about what biotech companies do. They're often very research intensive,
Okay.
which means they need a lot of money up front.
Mm-hmm. To fund those research projects.
Exactly. And they often have to borrow that money.
Oh, okay.
So when credit becomes more expensive because of rising interest rates,
Okay.
it becomes harder for them to raise capital and invest in new projects.
So if I'm a venture capitalist and I'm looking at a biotech company, I should be paying close attention to, like, interest rates.
You should. Those rates can give you a sense of how much money is going to be flowing into that sector.
It's like checking the weather forecast
Yeah.
before you decide where to plant your seeds.
I like that analogy.
Did they find anything else interesting about specific venture capital sectors?
They did, another interesting finding was in the business products and services sector.
Okay.
They found that investment in this area was actually negatively correlated with the value of the U.S. dollar.
Wait, so when the dollar is strong, investment in those companies goes down?
It tends to, yeah, which seems counterintuitive.
Yeah, it does.
But there's a reason for it.
Okay, what is it?
When the dollar is strong, it makes U.S.-produced goods and services more expensive for foreign buyers,
Okay.
which can hurt demand.
Right, because it's more expensive for them to buy those things.
Exactly. And if those businesses are seeing less demand, they become less attractive to investors.
Ah, that makes sense. So it's like a ripple effect.
Yeah, it is.
A strong dollar can, like, hurt those U.S. companies,
Mhm.
and then that makes investors less interested in them.
Exactly. And it just goes to show why it's so important to look at the big picture when you're thinking about investments.
Yeah, you can't just look at a company on its own. You have to think about the whole economy.
Exactly. You need that context.
So what you're saying is that whether I'm, picking stocks or investing in startups, understanding these economic connections is really important.
It is. It can give you a real advantage.
Yeah, it's like having a cheat sheet for the economy.
Kind of. But it's not about cheating. It's about being informed.
Right.
And it's not just about individual investors either.
Oh, okay. Who else can benefit from this?
Businesses themselves can use this information.
How so?
Well, imagine you're running a company that relies on venture capital funding to grow.
Okay.
This research suggests that you should be paying close attention to things like consumer credit rates.
Okay.
If you see those rates rising, it might be a sign that funding is about to become harder to get.
So you need to be prepared.
Exactly. You might want to adjust your plans accordingly.
So, like, maybe hold off on a big expansion?
Yeah, or maybe ramp up your fundraising efforts while credit is still easy to get.
So it's about being proactive and using these economic insights to, like, plan for the future.
Exactly. It's about anticipating challenges and opportunities.
So it's almost like businesses can use this research to get a glimpse into what might happen in their industry.
In a way, yes, it can help them make better decisions about hiring investment and overall strategy.
And you said policymakers could use this information too.
They can. If they understand how economic conditions impact investment, they can make policies that promote growth and stability.
So give me an example. How would that work?
Well, let's say policymakers see that rising interest rates are making it harder for startups to get funding.
Okay.
They might create policies that make it easier for those companies to get the money they need.
So it's not just about understanding how the economy works. It's about using that knowledge to, like, make things better.
Exactly. It's about making the economy work for everyone.
This has been a really interesting conversation.
I'm glad you're enjoying it.
But before we wrap up, I want to go back to something you said about this paper analyzing historical data. Does that mean we can't really use these findings to predict the future?
That's a great question. And it gets to one of the biggest challenges in economics,
Which is?
predicting the future.
Yeah.
While this research has uncovered some really strong links between economic factors and investment decisions,
Okay.
it's important to remember that the economy is always changing.
So what worked in the past might not work now.
Exactly. And that's where the real skill comes in, using these insights in a world that's constantly evolving.
So we need to be adaptable.
We do. The key is to use this research as a starting point,
Okay.
but to always be ready to adjust our thinking as new information comes along.
So it's about combining this knowledge with, like, a healthy dose of flexibility.
Exactly. The economy is complex. There's no magic formula for predicting what's going to happen.
Right.
But by understanding the forces at play and being adaptable, we can make better decisions and navigate the economic waters with more confidence.
I like that analogy.
Yeah, it's all about navigating those choppy waters.
So it's really amazing to think that we can get like a glimpse into the future of investment just by looking at these economic indicators.
Yeah, it is pretty fascinating.
But like you said, the economy is always changing. So how can we actually use this knowledge to, make better decisions when the rules of the game are constantly shifting?
Well, that's a great question, and that's why this research is so valuable.
Oh.
It's not about, having a crystal ball. It's about having a set of tools to help you navigate this complex landscape.
Okay.
Think of it like this.
Yeah.
You wouldn't, set sail without understanding, like, the winds and the currents, right?
No, you'd be totally lost.
Exactly.
Yeah.
And it's the same with the economy. Understanding these indicators can help you chart a course through the world of investing.
Okay.
Whether you're an individual managing your own money or a business leader making strategic decisions.
So let's say I'm a venture capitalist listening to this.
Okay.
What are some things I can actually do differently based on what we've talked about?
Well, the first thing is to remember that you can't just rely on your gut feeling.
Okay.
You have to look at the data, pay attention to those economic indicators, and understand how they relate to the specific companies you're interested in.
So it's about being data-driven and doing your research.
Exactly. And it's not just about looking at the numbers, it's about understanding the story behind the numbers.
Okay, so give me an example.
Okay, so let's say you see that consumer credit rates are going up. That might not necessarily mean you shouldn't invest in a particular startup.
Yeah.
But it should definitely make you ask some tough questions.
Like what?
Well, you might ask, how reliant is this company on outside funding?
Okay.
Do they have enough cash on hand to make it through a period of tighter credit? Have they factored these rising interest rates into their financial projections?
So you're basically trying to figure out if the company is prepared to handle a changing economy.
Exactly.
Okay, so it's about using those economic insights to, make smarter judgments about the risks and the rewards of an investment.
Exactly.
And I imagine business leaders could use this information in a similar way.
They absolutely can.
Yeah.
Understanding these trends can help them make better decisions about, hiring expansion, pricing new products.
Yeah, it's all connected.
It really is.
It's not just about finance. It's about understanding the world around us.
That's a great point. The economy affects all of us.
Yeah.
And the more we understand about how it works, the better off we'll be.
Well said. This has been a really insightful deep dive.
I'm glad you enjoyed it.
We've learned that the economy is complex, but it's not totally unpredictable.
Right.
And if we pay attention to the right signals, we can make smarter decisions.
Absolutely.
So to our listeners out there, keep exploring, keep learning, and we'll see you next time for another deep dive.
Sounds good.